what happened in Egypt during the last few months is actually a lesson to many African countries. Now, what we had since 2004 until the revolution in 2011 was a very robust economy, growing very fast. FDI coming up from $400 million to $11 billion in 2008. Massive amount of FDI coming. But this economic development was not accompanied by enough transparency, disclosure, and social responsible investment. So the result was we had more and more people complaining from what was going on, and the result was what happened, and you all know about that. Now, we do see a phenomenon there. Now, many of the companies and the businesses that were successful based their success on unethical practices in doing contracts with the government and with other players. Now, these companies were singled out after the revolution, and now they are being prosecuted for that. And those companies which were responsible and ethical and transparent, now they are very successful and more successful because they were appreciated by the masses. Now, the lesson is, even if you don't have enough or strong regulation in place, even if you don't have enough controls in place, it is good to be good and ethical, because the time will come where you have to be paying back if you were unethical. So now it's really a very clear sort of case where you can see companies which now are being protected by the people on the streets, and companies which are being attacked by people on the streets because of their previous unethical practices. Now, one of the good experiences that we had in Egypt a couple of years ago is we launched a new index for transparency and governance and being responsible for listed companies. And analyzing companies in that index, they always outperform the market. So when the market was going up, these companies were going up in a much higher rate than the rest of the companies. And when the market was collapsing, these companies were holding on to a better position than other companies. So in the Egyptian context, you can see clearly that being good pays off to you as an investor at the end of the day. And of course, the key question would be for companies to be transparent enough so that people know what they are doing. Now what's going on is you have a sort of facelifting procedure which is happening in many of the companies. They are now trying to catch up. They are trying now to be more transparent and to give more information. They are trying to reform their boards in a way to get out some sort of officials or politicians or whatever from the board and having professional boards of directors. They are now trying to have some sort of investor relations functions in which they disclose what they have been doing. Now, one of the lessons as well is it is not enough to be good, but you have to be transparent about how good you are. Because if you are good but you are not saying it, the assumption will be that you are not good, you are corrupt, something is wrong there. So, and this is very important to create this sense of competition between companies in disclosing information and being transparent about what you're doing.
Doing business in Africa, you can't afford to be without Africa Investor.